In this episode, we share significant updates to the processes involved in having your federal student loans forgiven. Let's get started.
Let's get some money. From New Money, New Problems, it's the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen. Negotiating compensation, purchasing your first investment property, helping your family with money, the highs and lows of entrepreneurship. New Money brings new problems that require new solutions. Join us as we work through them together. I'm Brenton Harrison, and this is the New Money, New Problems podcast.
Hello and welcome to this week's episode. Whether you are a member of our Escape Student Loan Debt community or you're a member of our New Money, New Problems community, and as I always say, those are separate entities, you are listening to the same episode on today, and that's because we have updates on your federal student loans, and because we have so many people in our New Money, New Problems community who are struggling with federal student loan debt, there are periods like this where the subject matter overlaps. There was a big update from the lawsuit between the American Federation of Teachers and the Department of Education on last week that will have a big impact on when and how and why your federal student loans will be forgiven. And we wanted to make sure that you had this information to know how to move forward. After the break, we're going to share that status report and the changes and how they impact you. But I do want to give you a couple of minutes of context as to how we got here. If you have federal student loans, you know that there are these payment plans called Income Driven Repayment plans. That's not a new concept to you. And under that umbrella of Income Driven Repayment plans, there were plans that were created by the Department of Education, and there were plans that were created by Congress. Now, as a part of the One Big Beautiful Bill Act and as a part of the lawsuits against the Biden-era Department of Education, there has been the argument that the plans created by the Department of Education are not legal, and as a result of those lawsuits and the One Big Beautiful Bill Act, they are phasing them out. Sometime between 2026 and 2028, the ICR, pay-as-you-earn, and save plans will be wiped away, and the only remaining payment plans will be the income-based repayment plans and the repayment assistance plans, which were created by Congress. Now, the Department of Education to this point has said, even if you're eligible for forgiveness on one of those plans that's being phased out, we're not going to forgive them. You got to move them over to IBR once you're eligible to have them wiped away. So there were a lot of people who met their 20 or 25 years needed for forgiveness on a plan that's being wiped away, who were trying to transfer their loans onto the income-based repayment plans to have that debt formally canceled. The Department of Education said that's not enough. We'll only forgive loans that are under this income-based repayment plan, so you got to switch it over here. But once you get it over here, we don't necessarily agree with how many forgiveness credits are on your listed totals, because the Biden-era Department of Education gave you credit for months that we don't think you should have credit for. So they had people move their loans over, or there were people who were eligible and already on the income-based repayment plan, but the Department of Education was refusing to forgive loans while they went back and rechecked their payment credits using their preferred formula. And for many borrowers, there's a huge time sensitivity to when their student loans are forgiven, because if you have student loans that should already be forgiven and the Department of Education drags its feet and they don't forgive it in 2025, you run the risk of having them forgiven in 2026 or later, which means that those loans would be taxable. So it could and should be forgiven right now when it wouldn't be taxable. But if the Department of Education doesn't start forgiving loans again in time and yours get wiped away after 2026, then now something that wasn't taxable becomes taxable, all because of government inaction. Additionally, the income-based repayment plan is the only payment plan under that income-driven repayment plan umbrella that required a partial financial hardship, which essentially means that if I compare your payment under income-based repayment plan to what you would pay under a 10-year standard plan, you have to prove that you would save money on IBR as compared to the 10-year option. And if you can't prove it, meaning you don't have a partial financial hardship, they would deny you when you applied for IBR. Now, the Department of Education realized, hey, this is a problem. We told people because of the One Big Beautiful Bill Act, they were doing away with all those plans and that they had to move over to IBR. But then we have people who are trying to follow the rules and move over to IBR, and we're declining them because they don't have a partial financial hardship. So we need to do away with the partial financial hardship. And they agreed to do away with the partial financial hardship, but they didn't update their systems in time for the onslaught of applications. So they removed it, but then you have people who would apply hoping to get on the plan and they were still being denied, you guessed it, because they don't have a partial financial hardship. And the American Federation of Teachers took them to court for this and many other reasons. They're saying you're not processing forgiveness when you should be processing forgiveness. You're not giving valid reasons for not processing forgiveness because these people are eligible to have their loans wiped away based on the current laws on the books. You're telling people that you're going to be doing things like public service loan forgiveness buybacks, and you are either dragging your feet or not providing consistent updates or just refusing these requests. And we're going to hold your feet to the fire by filing this lawsuit. They've been going back and forth in the courts, but on last week, they filed a joint status report. And after the break, we're going to tell you what that joint status report said and what it means for your federal student loan journey.
This is the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen. We'll be right back.
Are you wondering what new money problems you might be overlooking in your financial life? If so, we've got great news. We've crafted the New Money, New Problems Gap Finder to identify potential weaknesses in your finances in areas ranging from budgeting, investments, insurance, and even the threat your extended family's finances could pose to your household. Please head to newmoneynewproblems.com/gapfinder to complete it today. Again, that's newmoneynewproblems.com/gapfinder to take the assessment.
You're listening to the New Money, New Problems podcast. Subscribe now at newmoneynewproblems.com. Welcome back.
All right, so here's what happened. On last week, the American Federation of Teachers and the Department of Education submitted a joint status report to the court as a part of the lawsuit. So this signifies that they have come to an agreement on certain elements of this lawsuit and how both parties are going to proceed. We're going to put the link to this actual status report in the show notes on both podcasts. And right now, we're going to go through some of these terms and tell you what it means for people who have federal student loans. If you're looking on screen at the status report, it says, and I quote, defendants will continue processing loan cancellations for borrowers who are eligible for cancellation under the income-based repayment plan, end quote. This means the Department of Education is formally agreeing that they will start the process of forgiving federal student loans for people who are eligible under the income-based repayment plan. We're going to come back to number 5 and go to number 6 because it's connected to that most recent point. It says, and I quote, defendants will continue processing loan cancellations for borrowers who are eligible for cancellation under the original income contingent repayment plan and the pay-as-you-earn plans as long as these plans are in effect, end quote. What this means is the Department of Education is stepping off and stepping back from their stance that they will only forgive student loans that are eligible and transfer to the income-based repayment plan. And they're saying, even though we're phasing out the pay-as-you-earn plan and income contingent repayment plan options, if you remain on those plans and you meet the benchmark for forgiveness, we will forgive under those plans directly. You no longer have to transfer over to IBR to have your loans wiped away. This is a big deal, and it saves people on those plans the extra step of meeting that benchmark, but then having to worry about going over to that new plan, making sure your payment amounts, your credit amounts are transferred properly. You no longer have to do that. The department will forgive them right where they stand. Now we can go back up to number 5, and it says, and I quote, defendants will not deny as ineligible any borrower applying for the IBR plan on the ground that the borrower lacks a partial financial hardship. Jumping down, it says defendants affirm and will state on studentaid.gov that borrowers who applied for the IBR plan on or after July 4th, 2025 and were denied on the basis that they lacked a partial financial hardship are invited to reapply, end quote. This is the Department of Education saying, hey, we agree that we were supposed to remove the partial financial hardship. We also agree that our systems were not updated and we incorrectly denied people who were trying to get on IBR because they didn't have a partial financial hardship. They're saying, hey, that was our bad. We're updating our systems. If there was anybody who tried to get on that plan on or after July 4th, 2025 and was turned away, we're formally inviting them to reapply. Going to number 7, it says defendants will continue processing applications for public service loan forgiveness buybacks. This is a big deal. The Department of Education has been processing PSLF buyback applications, but at a snail's pace. But in my opinion, anything that's in paper and submitted to the court that is not the department like arguing that PSLF buybacks shouldn't exist is a win, right? It's just further codifying the fact that this very unique program is not currently under attack by the current administration. So this is something that's a real positive. Going to number 8, and this is very important when it comes to the taxation of federal student loans that could be forgiven sometime in 2025 or after 2025 when it would then be taxable. It says, and I quote, defendants agree that for their internal purposes, the date a borrower becomes eligible to have their loans canceled under the IBR, ICR, or pay plans constitutes the effective date of their loan discharge. Going down to subpoint A, says defendants agree not to file an Internal Revenue Service Form 1099-C for a borrower who becomes eligible for discharge in 2025 if the conditions in IRS Notice 2022-1 are met, end quote. What does this mean? It means that the department is acknowledging that there are some people who have met the threshold for having their student loans forgiven that might not formally have their loans wiped away until 2026 or beyond. And they're saying that for their purposes, they're going to consider your loans forgiven at the date that you met the threshold, not when they're actually wiped away. And to further solidify that agreement, they're saying if your loans were due to be wiped away in 2025, but we don't wipe them away until after that point, we're going to consider that the date and we're not even going to file a 1099 with the IRS, which basically means we're not even going to inform the IRS that the debt was wiped away. So they wouldn't even have any knowledge or information they can use to send you a tax bill for those loans because they wouldn't be aware that it occurred. This is a huge deal. It takes away the concern for people who have been waiting for months and months, fretting over whether their loans will be formally wiped away in time to not have to owe taxes. They're saying you're good unless you're on the save plan. And this is where this caveat comes into play. I have met people who have met their 20 or 25 years requirement. And the profile of this person is typically they were on the revised pay as you earn plan before it became the save plan. They met their 20 or 25 year requirement at some point, and then the save plan went into forbearance. So they're sitting there and they have enough credits to have their student loans forgiven. And based on the current guidelines up to this point, they could have transferred their loans over to income-based repayment and had them wiped away. But they kept them in save because they're hearing all these horror stories about people who have met that threshold, but their loans aren't wiped away and they're still having to make payments. So their thought process was, I'm going to stay and save where they're not making me make payments. And when I hear that they're starting to process forgiveness again, then I'll transfer it over to the income-based repayment plan. Well, first, in this notice, the department is not saying that they will forgive loans that are in the save plan. That's not part of the deal. So if you're in save and you're eligible for forbearance, at some point you got to come out of that plan to have them wiped away. But the timing of when you move them is very important based on this status report. It says in subpoint B, and I quote, for avoidance of doubt, defendants agree that for their internal purposes, when a borrower has 1, achieved eligibility under the SAVE plan, and 2, applies to transfer to one of the IBR, ICR, or pay plans on or before December 31st, 2025, and 3, that the application is approved on or after January 2026, the date that the borrower becomes eligible for cancellation under the new plan constitutes the effective date of their loan discharge, even if that date falls on or before the date the borrower's application was approved. End quote. Now that was a lot, so let me break it down for you. What they're saying is, let's say you're moving from the SAVE plan to the IBR plan, and you're eligible for forgiveness under the SAVE plan. Loan forgiveness is not offered through SAVE. You have to switch to another plan. And they're saying in this status report that if you switch from SAVE to IBR, they consider your date of forgiveness when you're eligible for forgiveness under IBR. So if you transfer your loans from SAVE to IBR and you're not yet formally on IBR before January 1st, 2026, you're not considered eligible yet. It's based on when you're eligible under that new plan. This is really important because if you're one of those people on SAVE who's eligible for forgiveness, but you have been waiting to transfer your loans, you need to do it now. You need to move from SAVE to an eligible payment plan, because if you move and for whatever reason there's a delay and that repayment plan isn't listed under IBR until 2026 or later, that debt that would have been tax-free from a federal level is now taxable because you waited too long. But if you get that loan transferred onto the new plan and it's listed as under that plan before 2026, you're in good standing. So this is a big deal, and hopefully it makes your day a little lighter when it comes to federal student loans, because there are a lot of areas in the status report where we were expecting pushback from the Department of Education, and to be clear, have seen pushback from the Department of Education. But as a result of this report, they have agreed to follow the rules in many cases as they were originally written, which actually shouldn't be that big of a deal. So I know this was a really detailed episode, but if you have federal student loans, you know that you want to know the details and you want to make sure you don't get them wrong, because there's a whole lot that hangs in the balance when you have that debt hanging over your head. If you're a New Money, New Problems listener, we'll be back next week with more financial information to benefit your finances. If you're only an Escape Student Loan Debt listener, man, you should check out the New Money, New Problems podcast. But I'll see you again in 2 weeks with information to help you have your student loans forgiven, reduced, reorganized, or expedited.
From New Money, New Problems, this was the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen.